Hi there everybody, this is Jazz, aka Trend Trader for you. So I know it's been a while and I haven't done a updated video on the sector analysis. So I'm gonna do a little bit of a quick overview of sector analysis, maybe go in a little bit of detail depending on the time. And before I do begin, I wanted to actually talk about the last analysis that I did on the SPY. So make sure you watch that and see exactly what I said in there as far as where price could come bounce and how the SPY is looking bullish, despite the elections, despite whoever got elected, etc., etc. Because before deciding on anything else, okay, you have to look at the market, you have to look at the trend. Let me show you real quick. You have to look at how the whole market is doing, right? So we talked about in that analysis how SPY was doing. In fact, I looked at in a monthly time frame. Let me actually go into the monthly. Let's just do this, okay? And we talked about how price could bounce from here, and depending on the trend, higher highs, higher lows, higher highs, higher lows, we could see a upward movement in the SPY. And this is, I'm looking at a monthly chart, you have a daily chart in here. So as you could see, price is soaking up all the supply to the left of it. Eventually, there won't be enough of a supply and price will more likely, the way it looks like, will break out of here and put in some new highs. Again, that's all speculation, but it's all technical speculation based on what I'm seeing right now, based on the trend, based on the higher highs and higher lows. And you could add a little bit of a economic fundamentals in there too if you need to. So that is what the SPY is looking more likely going to break out of here. And look at the other video and you'll see a better explanation of how I looked at the trend in that analysis. And before I do the sector rotation analysis, go on to ticker.tv, and if you don't know what the sector rotation analysis, what is it based upon, and this is one of the videos that got 600 views on that, and check that out and it'll tell you how the market works, okay, how the whole industry is divided into whole market is divided into 9 sectors, okay, financials, consumer staples, energy, industrials, etc., etc. So watch this video if you need to understand how the sector analysis work. And if you do need more explanation, I have more videos on the youtube.com under Trend Trader for you. Everything's under Trend Trader for you, so you can go in there and see more detailed videos of sector analysis. So that being said, let's talk about the sector analysis and how the things are looking to me. Okay, again, this is just my opinion, this is just my analysis. It's not perfect, it's not imperfect, but every trader has their own analysis, has their own view of looking at the market, and this is the way I look at it. It kind of tells me where is market heading and which sectors are bullish, which sectors are neutral, and which sectors are bearish. Okay, so as you could see, I have this preset Thinkorswim ETF, so of what you call a workspace. Okay, and if you need it, let me know, shoot me an email. I don't mind sending you what I have. I'll send you the whole workspace. As you can see, I have about 3 or 4 in there. I'll go in detail and show you exactly how I look at it. Okay, again, so first thing first, you got to look at the SPY. You got to look at the mother of the market, right? Mother of the market is what? SPY, Standard and Poor, because that is how the whole market is based upon. It's a benchmark of the market because it contains 500 stocks in there which represent the whole US market, right? So now digging down into it, let's go into how that market is controlled by, how it's how would you say, it's differentiated, or it's breaking down into 9 sectors. Okay, for instance, SPY has some of the financials in there, right? If you drop down in here, you'll see XLF, XLB, XLE, energy, materials, industrial, technology, consumer, utilities, etc., etc., right? So what I've done, I've plotted each sectors in here. So when I ran my chat room, right? This is exactly how I approached it. I looked at early on in the mornings or at the end of the weekend. I looked at which sectors were bullish. We don't just as a day trader. It doesn't even matter if you're a day trader of a or swing trader of a or a long-term trader, but your job or your part of your duty is to as a trader look at the market analysis in the morning, and if you're a day trader, look which sector is bullish or which sector is bearish, and you go into that sector. For instance, XLF, right? And if you go into, I'll show you that in sectorspider.com, you can look. XLF is a financial sector. Within the sector, you'll find multiple stocks. You'll find obviously XLF Financial, JP Chase Morgan, Goldman, what's the other one? Wells Fargo. So you'll find that in there, and you'll see which ones are bouncing, which ones are going to the downside, and based on that, you put them on your watch list. Okay, you put them on your watch list. Another way to day trade is find out which stocks are reporting earnings and which stocks are volatile for the last couple of days, and you put them on your watch list as a day trader, right? You don't want to do something at stagnant, which is just not moving at all. You don't want to day trade that, and rather you want to get into something volatile, as you can tell easily by looking at a sector. For instance, if you look at XLF, again, these are SMAs on there, which are the major popular SMAs. Again, I probably have a video on that too. Everything's free, right? Everything's free, and there's a video on in YouTube or Ticker TV explaining the SMAs. There's let me just zoom in. So I'm just gonna do maximize it so you can go in there and see exactly what I'm talking about. So you have if I right click on this, if you look at this red line, right, that's your 200 SMA. Each point is plotted based on last 200 days. Again, I'm not gonna go into mathematical of it. And then you have your 50 SMA, and you have your 20 SMA, right? Day traders would look into 20 SMAs, long-term traders will look into 200 SMA. Based on that, they'll see if the prices are above or below, and they can go long or they can go short. So as you can clearly see on this one, let me see if I can get my little cursor out in here. I'm sorry, 1 minute. I'm on the other screen. I'm finally using my desktop, and I have like 6 screens set up here, and I'm loving it. It's just my parents are helping me out, and it's sometimes like a couple minutes, and I'm here, try to do my analysis because I love it, right? So anyways, as you could see, we had a top in here, right? In your XLF, you had a top, you had another top, somewhat of a, try to come into this resistance area, and finally broke out of it. So if you were looking at this XLF and you had it on your watch every morning, every weekend, or once a week or once a month, you're looking at it, what you need to do is you need to put an alert right around here. Say, hey Jazz, I'm gonna put an alert here. Once it breaks out, boom, Thinkorswim is gonna alert me, hey, price is breaking out of here, 20 or whatever. And at that point, you need to know, okay, price is breaking out, let me start going to XLF, start looking at some stocks which are breaking out. And that's how you make quick swing trading money, right? Again, not every time you're gonna make money. You're gonna have stop loss. That's why stop loss are that's why I said they're your best friends. So keep your stop loss there, but at the same time, you're getting into something that's breaking out. You're getting into something where the demand exceeds supply. Okay, at this point, all the supply is soaked, and your new demand is being created. So easy entry on here, right around this area, right? And you could put your stop right under this. Again, I'm going a little bit more detail, and then you could just write it up, right? In fact, there's another flag that's forming in here. You have a beautiful bull flag forming. You could see a continuation of it, right? Continuation, once you break out of this area, you could even go much higher. So you guys need to look at this sector as sort of analysis, and then decide what you need to do. So that's your exit. So that's a very bullish sector right now. Okay, what I would do is kind of look for a break in. Okay, unless it breaks out of here, you can have another trade to the upside with the stop right underneath this area, but it has gone way far, way too soon. So this is something I would kind of put it on the side till it breaks out and retest back again, then you can kind of get in. So that's your XLF sector. So that is what you would call bullish, right? So again, same XLI industrials, Let me find something that is bearish, right? So XLP is what, consumer staples, I think. Yeah, consumer staples. So let's expand this sucker and let's go in there. So as you can really tell, I see somewhat of a head and shoulder pattern in here. Let me go into the weekly again. You do this in a right method, in a right way of looking at the chart, is looking at in a right sequence, right? You look at the SPY, then you look at the monthly on the SPY, you look at the weekly on the SPY, and the daily. Then you look into your sectors. Then you start looking at the weeklies on these. Okay, you look at the weeklies on these, then you look at the daily, then you go into the smaller time frame, which I'll go in that for you to initiate the trade. So let's look at the weekly. So a reason why I looked at the weekly, because daily looked kind of ugly on here, so I wanted to see if it's really coming to some sort of demand, or coming to some sort of support where it could see a bounce. But I don't see that. You see these huge red candles, that's telling you selling pressure, right? That's again, every buyer has a seller, every seller has a buyer, but it tells you it's a very bearish sentiment sort of market in this XLP. So stay away from consumer staples, right? You want to stay away from the consumer staples. Looking at the weekly chart, I don't see any, let me see, any support around here. Maybe sort of maybe right around here. Okay, this area price possibly could come down in here, and then look for a little bit of bounce on there. You want to look for a reversal candle, right? If you look at this, you have a beautiful, sort of a channel going on to the downside. So I'm kind of bearish on this, definitely bearish on this. In fact, what I would do is, let me do this again. And in fact, what I would do on this is your past, what was this, your past support is going to become your new resistance, right? So that, see bear flag in here, you had a bear flag, price broke down out of here. In fact, I would look for the prices to come back in here, retest this past support, which now is what, resistance. Again, you got to understand first thing first. Again, there's another a video on here how I explain about support and resistance relationship. Okay, let me go a little bit off of the topic. As a trader, you need to understand the simple things first, which are your golden things, right? You need to understand how support and resistance work, right? You need to understand how trends work, right? Higher highs, higher lows. You have a support and a resistance, how supply and demand works. Third thing is you need to know the market reversals, which are your candlesticks. You need to point out which is your bullish candlestick. For instance, this is your hammer, right? So you need to look at those. And let's say this is your doji reversal. Let me find a little decent one. This one, that's your bearish harami, telling you trend is ending based on this harami with your stop right above it. You short below it. You move as you go down. You take profit. That's a beautiful profit on to the downside, even though it's not a lot, but it is still a profit. And another thing is that you need to understand where these reversal candles occur. You don't want to find a bullish candle in an uptrend. Okay, you want to find a bullish candle in a pullback on a uptrend, right? Again, you want to find a bullish candle. You want to have an uptrend. You want to find a bullish candle to a pullback, right? This is a pullback. You found a bullish. This is actually a bullish engulfing candle, right? Bullish engulfing candle happening in a downtrend, but you look at the whole trend, which is to the upside. So that's a good candle to go long, because your trend is to the upside. You're just having a pullback. It's not a correction, right? But your trend is changing in here. You have a bull flag, okay? Break out of this resistance area or support area, which would retest this area, would act as your new resistance, okay? New supply. So you short it based on your hair. You stop probably up there, and you would target your profit potential to, this is your nearest support. So that's where you would target as far as your profits, or if you want to take your profits, okay? So hopefully I didn't get too complicated, but you need to understand support and resistance, trends, candlesticks, and then what mostly everybody thinks or everybody goes in and think indicators are the mother of trading. Okay, it's not. Indicators are bullshit. Okay, sorry, but they're lagging. Okay, even these SMAs. Okay, these are lagging. Okay, what you really have is, what you can really believe on is the candlesticks, right? Because they're happening as is, right? If the price goes up and down on here, it's happening as is. It's not lagging, right? If this transaction happening, it's literally happening in that candlestick. If you go into a little bit of a smaller time frame, you literally see that because the price is going up and down. But your indicator is not going to print till the whole how would you say, till the whole past few points are plotted. For instance, your 200 SMA is what? It looks at last 200 days and 200 days of average divided by 200, then it plots a point. So that's not going to happen, right? That's not going to happen till tomorrow, which will plot a point. And who knows what could happen tomorrow, okay? And as a day trader, you definitely don't want to be looking at the indicators. You want to be looking at something static, right? Not dynamic, because static is you have what you have, right? And dynamic is going to change over time. Your indicators are dynamic. They're going to stochastic, your RSI, your God knows there are so many, right? But you want to concentrate on the price action, right? Price action is your candlesticks, your time and sales. That's what you want to be concentrating on. Support and resistance, right? All that stuff. So got a little off the track, but got a little bit of a lesson in there. So that's your bullish, right? And that's definitely a bearish. XLP is a bearish. This is somewhat of a bearish. Actually, that is a utility is bearish too. And if you see a little bit of combination in there. These are your defensive sectors, right? Utilities. Right now people are confident the market is going up, and that's why they don't care. They want to take their money out of these utility stock, consumer staples, and put it into riskier investment, financials or industrial. They think that the financials are booming. When your financials are booming, obviously people are more confident. When they're not confident, they're putting their money where? More of a defensive stock, utilities, because you still got to pay your bills, you still got to eat cereal, etc., etc. So those are part of what? Defensive kind of stocks. Sorry, my little one is screaming. So anyway, so let's look at XL. This seems a little interesting. This could be this right here, okay? And how I'm looking at it is if you go in there, okay, I'm looking at this as I've been actually looking at it for a while, XLE, as a consolidation, right? Consolidation and beautiful, somewhat of a ascending triangle, you could say. I would like to see the ascending triangle in an uptrend. This is somewhat of a downtrend, but it could turn into an uptrend, okay? But possibly breaking out. Your stop could go right around. It's kind of a little heavier stop, but I'm looking at weekly. So this is longer term. You're not pulling your money out of it, next week or next month. You're staying in there for a while, because once it breaks out of here, the possibility for the trend to keep going up, the first resistance I really see is right around here, okay, 82 level. Once it crosses that, then you can have a little trend develop, and it could keep on going to the upside, and you keep on moving your stock. So I see consolidation area in here. Let me go into the daily, and this could turn into more like XLF kind of a thing, right? So this has been soaking up a lot of supply to the left side. There is only so much supply before it soaks it all up and then continues to go up, right? So keep an eye on this, and there's a little gap in here, so possibly could come fill a gap. Talking about gap, I did a little note on AMZ and talked about where the price dropped down, and I talked about it was a professional gap. That's a professional gap, and you can, naked eye, you can see that when the gap is, I think the rule is 1%. If the gap opens up the next day 1% of the price, it's more than 1%, it's a professional gap. Okay, again, everybody has different definition of it. That's just my thing. Okay, so if it drops down and it dropped down to that, to all the way to down. I expected it for it to be go lower and lower. And also, and that was a key point in here, guys, lower high, right? If you see higher high, you had a lower high, telling you trend is, it's not done, okay? It's not ending, but it's weakening, right? And after that low was put in below this, then you can say, okay, my trend is obviously going to the other side. You had a beautiful trend to the upside, now it's going to the downside. Actually, I'm bearish on this stock at this point, technically speaking, right? You do have a 200-day SMA, and there is you see that professional gap? Look, it's not even filled yet. Okay, the price could possibly come down on Amazon and come fill this gap. Let me show you a gap. That's the professional gap. You see how long it took it to fill? It filled right around here. See that thing right there? Let me show you. See, that's your professional gap to the downside. When did it get filled? At this point, right? That's when it got filled. And there are a lot of gaps within these candles. So this is a gap in here. Okay, that price closed right around here, and next day it opened here. That's actually a gap. If you look at a smaller time frame, that's actually a gap. Let's see if there's a gap that I see. It got filled. There's a gap. There's a small gap in here, right? It potentially got small gaps, which are called novice gaps. They get filled faster. Professional gaps takes longer time to get filled. Professional gap, professional gap, professional gap. It'll take a while for it to get filled. Okay. Then you have small gaps, which is there's a gap in there. And you see that little gap in it. That's the novice gap, right? Price went up, came down, filled the gap. There's a little gap in here. Again, you gotta go into, again, once you've been doing for a while, you can tell by looking at the candles where the price opened and closed, and that's how you can tell if it's a novice or a professional gap. Some are easy to see, some are not. So anyway, so that was your XLE. Definitely keep an eye on it, okay? Because that's something. And it's been going up, okay? It's been going up from 67 to 71. I came at a support area. So let's go back, and then you have, let's say, which one? XLB, yeah, somewhat of a, if you look at it, I'm not going to zoom in, there's a flag forming, right? There's a flag forming on here. It's kind of like an ugly flag, but that's a flag. So possible breakout to the upside. XLB is bullish, okay? So these kind of stocks you want to keep an eye on, because they could give you a run, something like this, right? To stay away from this, let the XLE prove you, okay? It's not proving yet, but it's very close. This is a okay looking. XLV is a healthcare, I think. I don't know, this is a little to the downside, but I don't know what to do with this one. Let's look at the little bigger time frame and see. Yeah, I would wait on it for it to put a new high and then maybe a pullback. Right now it's just it's one of those where it's sideways. It's stagnant, right? Again, you can go into XLV sector and you can look at all the stocks that are within this industry or the sector, and you can obviously find day traders. You can obviously find stocks that are bouncing based on the AT average true range, right? If you have an average true range of $1 to $2, you can always day trade those. So that's just looking at the daily. Now you kind of actually went very, very detailed and showing you how you can look at it, then go further into trading them. So let's look at a different time frame. So now I have is a hourly workspace, right? An hourly workspace. What I'm doing in here is comparing each sector. I have if I right click on this, edit study comparison SPX, which is your S&P 500. So I'm comparing each sector based on an hourly. As you can literally tell, XLF is outperforming S&P, right? Your XLI is outperforming. Which one is underperforming? XLP is underperforming. XLU is under. So do you want to day trade those? Yeah, you can, but on the downside, right? On the bearish side. So as a day trader or even as a swing trader, if you swing is what, maybe a few days to a couple weeks. If the swing is over, you're done. XLY is actually bouncing up today, so that could have been if you look at this let me show you day trading here actually, right? So if you're looking at this, if let's say if you want to trade this, you see that little flaggy pattern. You have a nice volume onto the downside on this flagpole. Then you have a base break out. You stop right, goes right below this red candle, right, or give a little bit of, I always give a little bit of room, and then you had boom to the breakout, right? You had a I don't have the whole number in here, but I have the percentage, 3%, right? Beautiful, right? Beautiful move to the upside, and that's your money, right? So based on these, you can find your bullish stocks, right? But you got to be in a smaller time frame. So compare it with your S&P hourly. Then to literally pull a trade, let me see if I see where is my other time frame. There you go. So to literally pull a trade, right, to the long side or to the downside, go into 3 minutes. That's strictly as a day trader. Okay. Again, you gotta define first of all what type of trader you are. You're a day trader. You're a swing trader. You're a monthly trader. A monthly trader or long-term trader or even a swing trader is not going to trade in 3 minutes. Okay. Only a day trader I recommend should be trading in a 3 minute, unless you really know, okay, that I'm ready to enter the trade. You can do that in an hourly time frame, okay, as a swing trader. But if you really want to know, okay, this is where it's breaking out in a 3 minute, or this, even if you want to get a little bit of small risk, but you want to get a really good entry, you can go into 3 minute, okay. So, but you can clearly tell as today in the morning, beautiful hammer opened, right? You had a little bit of base. Boom, you could have got in right above when it broke the first 15-minute range. Again, there's a whole day trading strategy, okay, that you can apply. I'm not going to go in detail, but that's just so advanced, right? But there's a way you can wait for the 15-minute day trading range, and based on that, and again, you got to look at the trend, support, candlesticks, then you can get in a trade. So that's the beautiful day trade right above here, this area. I guess I don't have the numbers in here, but entry in here, stop, even there below the low of the day, LOD, and high of the day, you get entry, boom, 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 right? Beautiful trend where you can literally stay in this trade. If you look at this, right? Sorry. Let's try another line. As you can tell, I'm not so that's your trend line. You use this as a guide. You have another guide that you can use. So to stay in this trade, right, you have a beautiful channel going on, right? You have a beautiful channel going on, prices going up, prices going down, prices going up, down, and up. Let it break this, right? So let's say you got in a trade here. Right. Keep riding. That's your recent higher low, okay? So you can move as price goes up, move your stop right under this. You also have a guide from your trend line, right? And if you want to be even more, a little bit of a, you want to give a little bit more room, instead of moving here, putting a stop here, put your stop right here. You'll miss out on a lot of profit, but if price comes down and goes up, which many times it happens, because that's how the market works. The slow times are where the pit traders or few traders try to manipulate the market, and those are the times you don't want to trade, right? You want to trade first 2 hours and last 2 hours. So as a day trader, you want to be sitting on the computer screen all day. That's just tiring, right? When I ran a chat room, we did first 2 hours, then we kind of relaxed, and then last hour and a half we got in, we saw some trades, and I missed it. We had so much fun in there. Everybody just contributed, with the stocks. But anyway, so that's just passing. Maybe one day I'll start again. So anyway, so you're still writing it, okay? You're still writing. Just be patient. You can have a trailing stop. You can have a somewhat of a technical stop based on your ATR, right? Okay, not gonna go in detail, but write this sucker up. This could be a monthly chart, this could be a weekly chart, but you can apply same technical analysis on either one of them, right? Because charts are charts. They are just candlesticks. You can't say if it's your trend is created either in a 3 minute or a monthly or a weekly. Trend is a trend. If it's an uptrend, it's gonna continue as to be as an uptrend. Once it breaks, you'll know. You'll know once it breaks out of here, you will probably see this lower high, lower low, lower high. Then you continue to go downside. That's when you know you need to get out of it, right? That's not happening. The stock is still up, so you keep on trading this. Okay. Anyways, going to too much detail in here, and then you have your indicator, which is your SPY, right? I'm using SPY as an indicator, not a stochastic, not a RSI, not a MACD. You gotta have volume in there because it tells you where the volume is coming. In fact, that's a bullish volume in here, right? Because you had a huge move to the upside, big contract or 600. As you can see, this you had a 675,000 of the stocks traded in here. Okay, that's biggie, and it's in an uptrend. So I would say it's probably gonna keep going up, but I could be wrong. But based on your knowledge, based on your technical experience, you just keep watching them. So that's how you're gonna do. Okay, go from biggest, weekly, daily, hourly, 3 minute. Okay, and look at what's bouncing up, what's bouncing down, and you wanna obviously, if you're trading XLV in here, you wanna be shorting it, right? 3 minute is to the upside and it's breaking below this area. And you put a high in here. And in fact, a double top, right? It's a double top. So you probably want to say, okay, look at the volume on here. That's an interesting one. You're seeing a bearish flag, right? You're seeing a little bit of a bearish flag to the downside. Look at the volume to bearish volume to the downside. Once it breaks, that's a beautiful trade in here. Once it breaks below this, short it with a stop above here or right above the flagpole. And that's a low risk. That's a low risk opportunity. And we already know that XLV is kind of neutral. And again, you don't have to trade this, but just showing you that this is how you could tackle something that is in a downtrend. Keep looking for bearish opportunities. And XLY or your XLF was your bullish, so keep looking for uptrending or bullish opportunities because the daily or the weekly was in an uptrend. And wow, XLE kind of bounced up today. Let's look at this one. This is actually would have been a nice 50. It went up first 15 minutes, broke to the downside. Could have been a short right around here, stop right above here to the downside. Only way I say short because look at the gap, right? Gaps tend to get filled. That's probably your novice gap, and it got filled. It's actually coming down a bit to the downside. And as you can see, lower highs, lower lows, right? So it's okay. You're gonna be right a lot of times, but you're also going to be wrong because you don't control the market. This Goldman and these big traders, they control the market. They know where it's going. But what you can do is be on the right side of the trade. Keep trading the uptrend. Don't worry about if it's making 52 highs or all-time highs. I'd rather keep trading it because chances are you are gonna be wrong a lot less because you're trading in the direction of a trend. To change a trend, it takes a whole lot, guys. It takes a whole lot to change a trend. I mean, we can all be combined and sitting here and short the market. It's not going to happen until a huge order comes in from Goldman or Merrill Lynch or some other big hedge fund, right? They are the ones that are going to change the trend. Trends are not changed just overnight. Okay, it takes a while for it to change. What you could see is a pullback. You will see pullbacks to recent demand or recent supply, and from those pullbacks you can see opportunities either get in or maybe even pocket in and get out. So anyway, so that was it, and let me just quickly show you that website where I think it's a sectorspider.com. These are all your ETFs. You can click on each of them. You can literally go in there and upload. Okay, XLP. If I just click on XLP, right, and you want to know what your XLP holdings are, you just click on there, go into holdings, and you'll see you have multiple holdings in here. There's probably over 50. Then you can get the XLS file and put it in your watch list. I actually have a video on that to somewhere on YouTube, and you can literally go in here, and I think I probably have all these, maybe it's on my laptop, but I literally have all these ETFs probably in here somewhere. Actually, that's public. I don't have it on here. It's on my other laptop where I named them XLF. Once I click XLF here, it's gonna show me all the XLF stocks. So once now that you've decided, hey, XLF is a bullish, let me go look into which stocks I really want to trade. And that was a good one, WFC, right? WFC and all the fuss about it. And I was going to talk about it the other day. That was a good, getting into a decent buy. And, whatever I know the corruption and all that, but when you want to look at the charts, that's once you see a opportunity, you tackle it. Forget about all the news, and you just want to I get a quick trade out of it, right? And once your XLF was bouncing, then you could say, okay, let me look at XLF, and this grew, right? This possibly right around here. Once it broke out of here, in fact, you can go to smaller time frame and look for better opportunities. But once it broke out of it, that was your opportunity to get in, and maybe even get quick trade or two. And I'm sure if you look at some others, even though this is not a best looking one, but I'm sure they're much better looking. For instance, Bank of America, right? That looked even in an uptrend, right? WFC, if you look at it, it's in a downtrend. I would have probably not traded it because there's better opportunities to trade over WFC. In fact, guys, I don't have time to trade. It's just I'm just so busy with the kids, and yes, I am. I hardly get on the computer, and when I do, it's just no. It's for a personal thing. I don't have any time to trade anymore. So, but hey, I have a lot of time when I get time to put a good educational lesson out there for whoever could use it. So in a BAC, you had a beautiful trend to the upside, right? That price is uptrending, higher highs, higher lows, right? So is this a better stock to get into over WFC? Definitely. Higher high, higher low, higher high, higher low, higher high, higher low. Definition of it, uptrend is 2 higher highs and 2 higher lows. Boom, it broke out of here, stop. I'm giving you a very, very open stop in here. You could go tight, you can go this, I gave you a lot of room on here. You can go stop in here. That's your entry right above it. Even if it open, that's fine, because your stop is right below here or here. You gotta, you can add in slowly, but that your trend was up, and boom, then you have a huge range. In fact, you're seeing another flag pattern, another entry with a stop right around here. Only thing is, it got to the upside. I would still trade it because it's this is where people it's gone too high, too fast. You can still trade it, but go in a smaller quantity. Okay, you don't have to put in your whole home line of equity on there. Just go a little bit smaller, right? So anyway, so that's how you trade. That's how you look at the sector analysis, rotation. Gotta understand the big picture, which is the benchmark of the market, SPY. Then you look into how the SPY is classified into different sectors, industries, groups, etc., etc. Then you look at the sector itself, and you look at which sector is more bullish than all the other ones. Once you decided that, you go into, if you want to just trade that sector, you can just trade that sector. If you are going to look for even more volatile opportunities, you can look into stocks within that sector. Okay, you can literally have charts, 50 charts of all the stocks within that sector. Then you go look at each one by one. Trading is not easy. Okay, it takes and if people tell you, hey, they make money all the time, that's bullshit, guys. People don't make money out there. There's definitely losers, but when you let your winners run, that's how you become a little successful, right? And it's a journey. It's a journey as you're getting education every single day, every single minute, and you could have a perfect setup and gone totally against you. You're like, okay, what the hell happened? But if you have the right education, if you know what you're doing, if you know that this is this is the way that trading works, okay? And it's okay that I'm wrong. It's accept that, you know, it just didn't work out. That's fine. But I did all my analysis. But when you go wrong, when you don't do your analysis, then one of your friend tells you, hey, you know what, this stock looks really good, man, let me go long. And you know, I've been there. I've lost it. I've gone bankrupt, you know, on my trading account. I've lost a lot of money. I've lost I've put my money into stocks that have just has had no meaning, just, you know, went, you know, to zero overnight, you know, or it wasn't worth a penny. And it happens, you know, but you learn from it. That's why I'm trying to, you know, put out these free videos where you can look at the market in the right way. If you do it the right way, at least you can tell, you know what, at least I checked my support, I checked my trend, I checked my candlestick, I checked the volume, and I checked the whole market, and I actually even added a few of the indicators. The indicators are pointing to go long. And if you do all that, at the end, you feel comfortable saying, you know what, it's okay. If I have a loss, I'll just keep on doing it. So anyway, guys, take care, and I'll talk to you guys later. And if I get time over time, I'll make more videos. Sorry for making this a little bit long. And hope all is well. And I don't know if your candidate won your presidency, if he or she did. Well, he did, right? Good, you know. And let's see if we'll see some changes for the next 4 years. All right, guys, take care, and I'll talk to you later. Bye.